What if I told you that your debt may already have been canceled and the proof is sitting with the IRS right now? Most people have never heard of the IRS forms 1099A, 1099C, or a 1099 OID, but these forms could be the key to discharging your debt completely, okay? In this video, I'm going to be breaking down what these forms mean, how to get them, and how to legally use them to challenge collections and clean up your credit, okay? So let's get into it. Not only am I going to be talking about challenging collections, but challenging debt. Using this as an aspect to discharge debt as well, but also at the same time prove the certificate of indebtedness. Okay, so if you're brand new, make sure to like the video. You like the video, you put that investment into me. It's completely free. I'll continue to drop more bangers for you guys. Number two, if you're brand new and you've watched multiple videos by me, or you're from Instagram or something like that, subscribe to the channel. You dig me? If you subscribe to the channel, I know that this is something that everybody wants to be pushed out there. And also share the video. If you got a friend, a family member that wants to learn more about this, or you're trying to explain it to them, instead of trying to explain it to them yourself, send them to my video. You dig me? So once again, thank you guys for watching this, and let's dive straight into it. Okay, let's talk about the basics. Okay, what a 1099A is, what a 1099C is, and what a 1099 OID is. Okay, got the OID up, but let's just go straight to the 1099A. So this is the 1099A form. Essentially, it's the acquisition or abandonment of secure property. The Form 1099A is used when a lender repossesses or forecloses on a property, and it tells the IRS that the property was either abandoned or acquired, usually due to a loan default. Okay? Then we dive into the 1099C, which is the big one, I would say. If it is filed, then that meant that the lender canceled or forgave your debt, meaning they wrote it off as a loss and reported it to the IRS. It's very interesting that it means that they canceled or forgiven your debt. And people talk about loan forgiveness and things of that nature, not knowing that this is how they forgive loans. All right. Then we dive into the 1099 OID, which is the original issue discount. And the original issue discount, some believe it is used when your promissory note is monetized or sold, and the bank collects a financial gain off of it. Okay? Essentially monetizing your promissory note using a 1099 OID. So here's the key point. If a lender files a 1099C, it means the debt has been discharged for tax purposes. So the question that you'll ask yourself is, why are they still collecting from you if they discharge the debt? If you see charged off on your credit report, then that means that they filed the 1099C. Okay? But you can also argue on the aspect of a 1099A, where it talks about acquisition or abandonment of secure property, when they sold your mortgage, or when they sold your promissory note, they essentially abandoned it. Okay, you can argue that as well, but we're about to dive into more key points of how the lenders use the forms to their advantage. All right, now before we dive into that, let me tell you guys how to get these. Okay, you can go to the IRS website, irs.gov, and you can go to forms and instructions, list all current forms and instructions. And you can literally find, let's see if I can just type it in, 1099. You can find these forms on the IRS website. Just go to forms and instructions, type 1099, and you can pull it up here. Okay. If you want to order these forms, all you have to do is come down here, click order forms and publications. Okay. And you can do an online order, or you can go to forms and publications by US mail. Click order tax forms, and you can order up to 20 for each form, and you put your quantity. You know what I mean? Look, boom, type in 1099, boom. You know what I mean? It's not legal advice. All right. All rights are reserved. It's not financial advice. I wouldn't tell anybody to do this without doing their due diligence. You know what I mean? But you can come here. Hold on, let me refresh. You can come here, type this in. Okay, I don't know why when I type it in, it's not pulling up, but refresh one more time. So scratch that out. You actually go to order forms and publications. Then you want to do online ordering for information returns and employer returns. And I want to highlight that you can now do the e-file with the IRIS. Okay. And it says you can do this for 1099As, 1099Cs, 1099 DIV, 1099 OIDs, so on and so forth. Okay. But you can also order these as well if you want a direct form. Click here to order forms, and instead of 20 forms, you can actually order 100 per item. And then you come here and you search 1099, it'll pull up 1099A, 1099B, C, blah, Z, blah. Okay, you put your quantity and you go ahead and order it. Now, again, before you do all of this, make sure you understand how to use this so you don't just have a bunch of forms and you don't use them. I'm not gonna lie. That was one of the first things I did. I ordered a 1099 and I didn't even know what to do with it. Or as a matter of fact, I just learned how to do the e-file. Now it's just more convenient for me. But if you like to actually write it down, go ahead and come here and you can order it online for free. You dig me? This is not no mystique, no mysterious thing. People would charge you to do this, but again, you can go online and find this. Or as a matter of fact, you can e-file on their website now. I didn't even know this. Okay. Other aspects to e-file, there's 1099online.com. You can e-file it there as well. So again, if the IRS is doing it, then you can pretty much do it as well. All right. Now let's just talk about how lenders use this form as an advantage. Okay. Here's what they don't tell you. The lender might write off your debt, claim it as a loss using a 1099-C, and then they get a tax break. Not only that, but they then sell the charged off debt to a collector who tries to collect again, which is called double dipping. All right. The third thing is if they file a 1099-A, it usually means they already took the asset, so the debt should be considered settled. And in some cases, they also create money using promissory notes and report it as OID income to the IRS. So the thing is, they got paid. No matter how you spin it, no matter what form they filed, they got paid. And the question is, why are you still paying? And this is what we're about to go ahead and challenge right here. So here's how we're going to use these forms to discharge debt, okay, and dispute it. But before we get into that, there's a couple ways that you can look at this, okay? If you look at it in an aspect of, there are people who will say, you know, you cannot, only the lender can fill out these forms. That's a great point. Depending on how you look at it, yes, you cannot file these forms yourself. All right. Contrary to some of my teachings, my early teachings, is the fact that you can file these forms yourself. But there's an argument that you wasn't the lender. Okay. So you have to go about it differently. Okay. So we're going to talk about how to go about it if you are not considering yourself as a lender. And I may do a separate video for the vice versa, but I'll give you guys a brief for this video. But let's act as if you aren't the lender and you want to utilize these forms to discharge your debt. Okay. Back to what I said before, a lot of these forms either monetize, settle the debt, so on and so forth. Okay. So let me walk this through on how to be able to use the things that they have done to your favor. If you see something as charged off, this is what you want to challenge and this is what you want to contest. The first thing that you want to do is you want to ask the lender, the IRS or the debt collector if a 1099-C or a 1099-A was issued in your name. Okay? Because if it was issued in your name, you can also request your IRS transcript to see if anything was filed without your knowledge. See, the importance of the Truth in Lending Act is the fact that they must inform they must give you all information about your credit. So if they filed something on your behalf, such as a 1099-C, they should notify you of it. You hear me? So then we go to step 2, okay? Use 1099-C as proof of discharge, all right? If they cancel the debt, include the 1099 dispute letter under 15 U.S.C. 1692G under the FDCPA, all right? If they file the 1099-C, you want to send this to them and essentially ask them if they have a legal standing or a legal right to collect on the debt if they already discharged it. Okay? If anything is charged off, it was literally settled. So are you guys the holder in due course? Okay? Do you guys have legal right to collect on the debt? You dig me? You made your money, so what are you coming after me for? Then if it goes to a debt collection agency, you just show them the evidence of discharge. That's all you need to do. It wouldn't be an aspect where you file another 1099-C, you file a 1099-A, so on and so forth. No, that's not something needed if it was already charged off. Now, I'll be open and honest. Usually it takes a certain amount of time to get a debt discharge. It would take you defaulting on their end, and then them seeing that you're not going to actually pay your debt, then they'll discharge it. Okay, so this route is if something is already charged off. Okay, but it doesn't change the fact that you can request it to be charged off. All right, so if it's charged off, you want to basically challenge the debt. You want to challenge the validity of the debt, because if it was charged off, then the debt is not considered valid. All right. Under the FDCPA, you're essentially going to be asking them if they are the holder in due course. You're going to be asking them to provide informed information about your credit, if it was discharged, so on and so forth. Okay. And they must prove it to not be. If they prove it to be, then you can use that information to, number one, settle on the debt and then stop debt collectors. But also, number two, you can send this to the credit bureau. So this is when we dive into filing a credit dispute. Okay. If they're still reporting a discharged debt to the credit bureaus, dispute it under the 15 U.S.C. 1681S-2 and attach the 1099-C and demand immediate deletion. So we dive into 15 U.S.C. 1681S-2, and this is the responsibilities of furnishers of information to consumer reporting agencies. Okay. So essentially, it's going to break down the duties of the furnishers of information to provide accurate information. Okay. Reporting information with actual knowledge of errors. Okay. So a person shall not furnish any information relating to a consumer to any consumer reporting agency if a person knows or has reasonable cause to believe that the information is inaccurate. Okay. A person shall not furnish information relating to a consumer to any consumer reporting agency if the person has been notified by the consumer at the address specified by the person for such notice that the specific information is accurate, and if the information in fact is inaccurate. Okay. So once you put it out there that you believe something to be inaccurate, they must do some proper procedures before they can continue to report this information. And then once they find out that it was inaccurate, and inaccuracy means that it must be 100% accurate, okay, it must be 100% valuable to the consumer, then in fact, any and every information can be taken off your credit report. Okay. Another thing I want to just go ahead and highlight too is when you scroll down a little bit down this subsection, one of the things that it was talking about was the reporting. Okay. It talks about what should be reported. Okay. But I want to just go straight down to this exception right here. It says clause 2 shall not apply with respect to a credit obligation or account of a consumer that has been charged off. Okay? So this is very specific information under the Fair Credit Reporting Act under 15 U.S.C. 1681 S-2. And all you have to do is attach that 1099-C to your former dispute letter and demand immediate deletion. Okay? It's best when you kind of have this kind of ammo to push for deletions to come much faster. But if you don't, I mean, it doesn't change the fact that you can challenge it too. Okay? You also may be able to argue fraud or unjust enrichment, especially if they took a tax benefit and still trying to collect from you. These are the things that you want to take notice of. These are the things that you want to challenge. These are the things that you want to ask them about directly so that you can hold them accountable to it. Because if they are doing things improperly and fraudulently, these are things that essentially cannot be treated lightly in court. Okay? And you have a right to challenge any and everything. All right? So then I want to talk a little bit about the 1099 OID and the more advanced angle of challenging. Now, this part is for people who is willing to do the deep research. The people who are willing to do their due diligence. The people who want to go on more of an aspect of challenging the debt further. And, for some people are looking to get recoupment. Now, again, I'll say this again. It requires deep research. Deep research that I'm not going to put all into this video. Okay? Some people believe that the banks file 1099 OIDs to report gains made by using your promissory note as an asset. If it is true, it supports the idea that you created credit and the bank profited without lending you anything of value. So I'm not saying that this is guaranteed, but it's a concept worth looking into if you want to understand how money and debt actually works. And I said I wouldn't do no deep research, but I'm going to tell you pretty much from my angle and how you can essentially challenge it yourself. One of the questions that you may ask, okay, can you file, well, I asked in the beginning was, can you file that 1099-C or that 1099-A yourself? It'll say no, the lender only can do that, okay, or a creditor can. And they'll say that you're not authorized to file a 1099-A or 1099-C unless you are the lender or the entity that acquired or canceled the debt. Okay? So if you decide to do this and you don't understand your legal premise, then you can be put in a position where there could be IRS penalties for fraudulent filing or IRS audits, okay? And potential criminal liability if you knowingly file false forms under Title 26 of the U.S. Code. So I bring this up not to scare you, okay? But I bring this up so that you will not just do this on the premise of I have these forms and I can do that, but I want to bring clarity around if you decide to go this angle where you start to file these forms yourself, it's best if you understand the angle and direction that you must go towards. It's very similar to the angle that I talked about when it comes to 1099 OIDs and when it comes to the challenging the creditor on who actually created credit. Now, once again, this is not legal advice. Okay, this is not financial advice. Okay, these routes that I'm talking about will always be harder than actually paying your debt. Okay, or just letting it get charged off. Okay. If you decide to go this route, just know you got to have a very deep understanding and do very deep research in order to understand and substantiate your claims. Okay? So before you do this, make sure you do your due diligence. Before I talk about the angle that I would take, make sure to like the video. Also, subscribe if you're brand new, man, so I can keep dropping more bangers. And tap in with your boy, man. Comment down below. All right? If you guys experience this, drop down in the comment section your experiences. You dig me? So the alternative way, okay, and I'll talk about this in a second, is you know, challenging the consideration. Okay. So one of the questions that I typically will ask, okay, so based off what we know about the Truth in Lending Act, what if you argue that you were the lender? What if you what if under the Truth in Lending Act it says that you're the creditor? Okay? Because under the Truth in Lending Act, the creditor under the law, and this is for my people who haven't looked at my other videos where I talk about the Truth in Lending Act, okay? When you look at 15 U.S.C. 1602, it says the term organization means a corporation, government, governmental subdivision, agency, trust, estate, partnership, cooperative, or association. But then we dive into the term person, okay? Person means a natural person or an organization, okay? Then we dive into the definition of credit, which means the right granted by a creditor to a debtor to defer payment of debt or to incur debt and defers payment. Then we dive into the term creditor, refers to only a person. Okay. Now, in the Truth in Lending Act, it says that the term person means a natural person or an organization. It doesn't say that a person is just an organization. It says it's a natural person as well. So it has to be either or. In order to be a creditor, in order to extend creditor, you have to essentially be a natural person or organization. This is also backed up by modern money mechanics. This is also backed up by the Federal Reserve Act. Okay. Because banks do not lend money. Okay, this is also backed by 12 U.S.C. 1431, where it says that their duty is to borrow and give securities. Okay, so we understand that they're not loaning us money on that fact. But then if you go to the Truth in Lending Act, which is what they must follow, which is the truth in lending, it also says that they are not the creditor. It says that they're an organization. Okay, so they can't be a creditor if they're not a natural person. Now, this doesn't necessarily mean that that's what the Truth in Lending Act is saying, but if you interpret it that way and you use this as a direction of your argument, then they cannot like deny what you are reading, okay? Now, this may be more of a legal theory, so obviously do your due diligence and make sure you are challenging them accordingly. But the question is, if my promissory note funded the loan, doesn't that make me the real lender? Creditor under the Truth in Lending Act, okay? Because of what the Truth in Lending Act says, you can essentially argue that, boom, I signed a promissory note, which is a negotiable instrument. That note was then monetized, deposited, or used to create funds. So essentially the bank used your signature, your credit, to fund the transaction. So therefore, you're the source of funds, which means that you're the real lender or creditor, okay? This is public information that not that you should know, but the banks 100% know. Okay. So this has grounds in law and banking practice because under the Federal Reserve Manual, okay, modern money mechanics, it says that banks do not lend money, and when banks makes a loan, it accepts a promissory note in exchange for credits to the borrower's transaction amount. Okay, the borrower creates the credit. The bank records the loan as a bookkeeping entry, and no actual money is lent. Only a credit is created using your signature. So without your signature, you can argue that the bank never really risked or lent anything of substance and only processed a credit based on my note and then you provided the only real consideration. That essentially makes you the creditor, okay? The Truth in Lending Act try to make definitions tricky because it will define a creditor as someone who regularly extends credit and is the party to whom the obligation is initially payable, okay? And legally, the note was payable to the bank even if you created the value behind it. And they will argue that you're not in the business of lending credit. The bank is, okay? Here will be your counter argument. The promissory note was deposited and treated as an asset by the bank. And if they created the funds based on my credit and never disclosed that I was the actual source of the loan, that's a Truth in Lending violation due to non-disclosure of material terms. So you could also argue that there was no meeting of the minds. You never told me that I loaned you money. Okay? You never helped me understand that. Number two, you can also argue that the lender misrepresenting the nature of the transaction. And number three, under contract law, there must be full disclosure and lawful consideration from both sides in order for it to be a valid contract. Okay? So the strategy that you would use to essentially, you will have to essentially claim the creditor status in court and essentially use this argument to number one, challenge the legitimacy of the loan under the Truth in Lending Act. Number two, force the lender to prove the funding source and give full disclosure. Number three, you can argue that there was material misrepresentation of this transaction. Number five, you can demand rescission under the Truth in Lending Act within 3 years for certain loans. And lastly, you can combine it with the UCC claim, 3-305 or 3-603, to argue no valid contract exists. Okay? So the aspect of you may not be the creditor by Truth in Lending's technical definition, but if you funded the transaction, then morally and materially, you acted as one. Okay? That's the core of your argument, and the Truth in Lending Act was violated because the bank never disclosed that you were the real source of value. Now, I can dive a little bit deeper, but this is the part where you kind of just do your due diligence and you check this out for yourself, because they're gonna challenge you on these things. And I typically, tell people to become very well versed in these things so that you're not in a position of where when this stuff starts to happen, you guys don't know how to challenge these banks. Okay, so essentially there's multiple strategies that you can go about utilizing the 1099. Okay, just to kind of go back to it. Okay, you can either go this route, which requires deep research, or you can go on the aspect of if they already did it. Boom, you can request copies of that 1099, that 1099-C, okay, from the lender and the IRS. You can use that information as evidence of a discharge. That's all you need is evidence of a discharge through debt validation letters, through FDCPA disputes, through credit reporting and disputes, through court responses. And if a creditor sent a 1099-C but is still collecting, that's grounds to argue unjust enrichment, double recovery, and fraudulent collection practices. Okay, so you have to challenge them on these things using debt validation, using UCC 3-603, requesting for full accounting and contract under the Truth in Lending Act, and enforcing the discharge through IRS reporting forms if it is available. So these are the things that if you have a clear understanding, it doesn't matter where you're coming from. If you're coming from the aspect of they already did it, that's making it even easier. When people tell me that things are charged off, I am so happy that they told me that, because the job was already done. You don't have to submit another 1099 if it was already charged off. Okay? If it's already sent to collection, you don't have to submit a 1099. But if you do decide to submit a 1099, you have to come from that angle that I just stated, where you are proving the grounds of you being a creditor. Okay? So now we're coming to the end. This video is getting pretty long, and I may do a part 2 to this video. So if you have any questions, put it down in the comment section down below. Okay? So my question is, if you've ever had a debt discharge canceled or repossessed, you want to make sure you get your 1099 forms, and they essentially may be the proof you need to shut the door on any debt that you have. Okay, again, it's not legal advice, but you should be, if we're in the same frequency, then you're getting what I'm putting down, whatever that phrase is. Okay, so if you want help writing your dispute letter for these forms, down below, check out the Complete Debt Guide. Okay, you can go anywhere else to, we'll talk about another platform where they'll help you as far as debt validation and stopping debt lawsuit. But if you want to understand how to do the 1099, how to be able to challenge them through the administrative process, all of that is in the Complete Debt Guide for only $47. As I continue to make these videos and I start to add more resources to my Complete Debt Guide, I can't say that it won't end up going up. All right. I just have to be completely honest, because the more work and the more effort I put into this complete debt guide, the more I'm understanding the value and really wanting more serious people to tap into it. Because yeah, people look at $47 and just, yeah, that's all, but they don't take the info serious. So if you want to take the info serious, then I would take advantage of that $47 offer now. Okay. And this is specifically for my debt discharge people, my debt validation people, people who want to understand debt more. Number two, if you want that one-on-one coaching for fixing your credit, removing these charge-offs, these negative items off your credit report, go ahead and tap into my one-on-one mentorship. My one-on-one mentorship is geared towards fixing your credit and positioning your credit file to get up to $100,000 or more in funding. If you have debt that needs to be discharged, or that's something, a route that you want to go, tap into the complete debt guide for only $47. Okay. You don't apply for my one-on-one mentorship and then ask me 1,000,001 questions about discharging and sovereignty and private and this, that, and the third. I'm going to tell you over the phone straight off the bat, hey, look, this is not the call for that. Okay. Number three, if you need help responding to a debt collector when it comes to a lawsuit, if you want to do the debt validation process, but you don't want to learn how to do it, tap in with SoloSuit down below. SoloSuit will literally do the work for you, and all you do is pay an upfront fee. Okay. And then lastly, if you want to connect with me on a more consistent basis, check out my Instagram down below at biz.nick. Okay. I post daily content that's more of a personal connection. If you tap in there, then you'll be able to see me on a consistent basis and be able to get updates when I post a new YouTube video. And my last question is, have you ever seen a 1099-C or a 1099-A connected to your debt? If so, drop a comment and share your experience. Remember to like, subscribe, turn on the post notifications, and leave a comment. All right. Tap in with your boy. Let's connect down in the comment section, because I've got more videos that's going to help you fight back and win your freedom. And that's what it's all about. Becoming free of this matrix. Okay. Appreciate you guys for watching. I love you guys, and I'll see you next time.